All right, Nikki Haley is stepping down as our ambassador to the United Nations. And think of the difference how this was handled, let's say, with Rex Tillerson when he found out that he was losing his job via presidential tweet. I am so convinced that would happen to me. You know, like, oh, so where's Neil? Well, he just was tweeted out of a job. Anyway, what are we to make of that? Because the truth of the matter is, despite the drama associated with this and the momentary hiccup in the markets as a result of this, the firings and the sort of dislocation at the White House has slowed remarkably over the last year. Let's get the read from the Wall Street Journal editorial board member, Dan Henninger. We've also got Moody's Capital Markets chief economist, John Lonski, and certainly last but not least, Deirdre Bolton. Deirdre, it says something about Nikki Haley that there was this moment to say goodbye, something rarely afforded a lot of people who step down or are pushed out.
And not done via Twitter, to your
right.
point. And even Quinnipiac poll, something like 63% approve, and this was sort of done between Democrats and Republicans, of the job that she has done there at the UN. I think something like 17% disapprove. Yes, this is as good and as gracious a leaving as I think we've seen for this entire administration.
What is your impression of just turnover at the White House? Now, much has been said about it's like a revolving door and it's bedlam and craziness. To read Bob Woodward, just nuts. It might not be that way at all, or at least it's changed.
Well, it's my impression things have calmed down significantly. I mean, John Kelly seems to be set. Rod Rosenstein, the president's made a commitment to him. And Nikki Haley, I mean, she's done something nobody does anymore. She's quit at the top of her game.
Yeah.
Everybody in business, politics, even media, stay too long.
They overstay their welcome, right?
And Nikki Haley her status among the Republican Party and conservatives could not be higher than it is right now. And I think she's got her foreign policy credentials, and the great mentioner, she'll be on the list for 2024.
Although
for sure.
2024, right? Because she did have to say, to your point, right? And for those who are about to ask, I am not going to run 2020. Because you're right, she's done a good job, it seems.
But she'll be available if anything, another big position comes over. Secretary, you never know what's going to happen. It's a long 4 years.
Absolutely.
But she's riding high right now, Neil.
You know, we talk about 4 years. Let's talk about 4 weeks, and of course the midterms from this day. Is it your sense that this moves the needle, John, one way or the other, and ahead of that?
I don't think it does. I think the Brett Kavanaugh controversy and confirmation probably did. That may have helped the Republicans on balance. It got them energized, at least among those that supported Kavanaugh. I think so. This isn't of any great importance. Maybe whoever he appoints to this post might have some effect. We'll have to wait and see.
I always think, guys, the far more real with the markets is the backup in interest rates. That has a tangible impact right away. Would it be an impact in the midterms? What do you think? The interest rates backing up, getting higher.
Yeah, it might. I mean, the interest rates are obviously going up like this are going to, I think, stocks are in for a rough ride. It's not going to affect the real economy. The real economy could hardly be stronger than it is right now. That's not going to change. But with interest rates here going up, interest rates in Europe going up, I think all that money that quantitative easing pushed into risk-based assets, that's probably going to start coming down. And if people feel that the stock market is a market, Donald Trump always cites it as the primary metric, it could have an effect at the margin, Neil.
Well, I beg to differ on one point, and that is that unit home sales peaked back in the final quarter of 2017. They're down. There's an index of housing sector share prices for the year to date. That is down 19.5%. Today, that index is down by more than 1%.
So they're in a bear market.
When home sales peaked, the 10-year Treasury yield final quarter of 2017 averaged 2.4%. This afternoon, it's 3.2%. Higher mortgage yields are hurting, I think, those first-time home buyers that are having a great deal of difficulty coming up with these sizable down payments.
But isn't it the reflection on higher rates a reflection of a good economy? And the housing issue notwithstanding, that's very real. That's palpable. And what's happening to auto stocks, that's very real. But that is a sign of the strength of the economy.
It is a sign of the strength, but I do think there's an argument to be made that if all borrowing gets more expensive, to your point, mortgage borrowing gets more, I want a car loan or I want any kind of loan, I'm going to pay more on my credit cards. If I'm a consumer, I'm going to feel that. We also talked about oil prices, right? I mean, they had a big move, something like a 10% move in the past month. people pay more at the pump. So that's yet another point. The Fed, we have to assume, is going to keep tightening. Again, I know you like to point out the context, Neil, that if you're been alive for a while and been a home buyer for a long time, these rates are still low. But for millennials who are trying to get in, they're annoyed. They vote. Plus, we have these kind of unforeseen consequences, or maybe none, we don't know yet, of the tariffs, right? This $200 billion that we put against Chinese goods has yet to really be felt. Maybe it will never be felt, but that's just an open-ended question.
But for automakers and their parts, it's being felt. Right?
You know, another thing to note, too, the economy is strong. The unemployment rate is only 3.7%. But the last time we had an unemployment rate less than 4% in 2000, wage and salary income, the aggregate, is growing by roughly 8% year over year. That measure right now is growing by less than 5%. So we're really not seeing that type of growth in income that we ordinarily associate with this very low rate of unemployment. Something to consider.
And that 10-year Treasury yield, sorry to interrupt, I mean, that went up something like 40 basis points really quickly. I mean, that caught a lot of people out. And that
markets overshoot. And this is, I think, this is
the market's overshooting, example. And that it becomes an issue that we didn't appreciate before?
No, I don't know this market's overshooting. It was up so high. I mean, there's going to be a trip back down. These are all intangibles. The NFIB, the Small Business Federation, its measure of confidence among small businesses has never been higher.
That's right.
Most Americans work for small businesses, which means you go to work every day. Your business is good. Business is strong. It's got to be a good feeling.
And the tax structure is helpful,
and the
right?
tax structure is helpful. So how all this adds up in people's feelings about the state of the economy, the state of the United States going into those November elections is an open question. But most of the wins are at the people's back and at the back of the economy.
Well, let me switch it around then, guys. I know this is a political question, but I think if the consensus is wrong, as it had been wrong on the markets, as it was wrong about Donald Trump getting elected in the first place, is it wrong about assuming Republicans lose control of the House? If they were to keep the House, actually build their numbers in the Senate, I would imagine that would be a surprise for the markets, and since this is largely a conservative crowd, not across the board, a welcome one.
Here's what I see happening. If that's the case, equities go higher, but so will Treasury yields. And we can only hope that Treasury yields don't rise so quickly that cuts off the likely equity rally if the Republicans...
Well, that's Trump's biggest concern, right? That Jerome Powell overdoes it.
Yeah. And I think right now...
He's not the first president to state that.
Inflation's well under control. Inflation expectations were 2% when the unemployment rate was 8% back in 2012. They're 2% today, according to the TIPS market tip.